Despite the fact that VS faced that downside today, I must remind you guys that the play is still suggesting a bear trap. And the reason why I'm saying this is going to be in the following. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with the ticker symbol VS, technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's go ahead and dive right into the charts. Actually, guys, one more thing. Please go ahead and remember that the ARC Masters trading course that I'm offering is now down to about 9 or 8 seats left in the roster. Okay, so please go ahead and find the description below and you'll see the link for Discord there for you to go ahead and check out the information and reserve your seat now before it's too late. Okay, we're going to go ahead and go over every topic from the beginner trading all the way to advanced topics and mathematical application. Okay, so let's go ahead and get started with the ticker now. Okay, so 8-hour chart VS. This is still suggesting that bear trap that I'm talking about. Okay, so please go ahead and notice right now how everything is suggesting bear, bear, bear. Okay, so please look at this. We have, just like we talked about yesterday, a perfect resistance touch, which is usually found after we find test number 1, 2, and 3 of the resistance. Golden rule of 3 of the ascending broadening wedge suggests for short positions to open here, right? They would usually take that profit or cover their positions upon reaching that wave number 2 high or just above it, right? Then we actually come back up, we test the resistance as a valid area of as a resistance, right? Short sellers open up once again and they capitulate this all the way down to the nearest geometrical target, right? So in this case, after that covering, we come right back up, right? And then the short positions attack once again right at this validation of a newly converted what was a support into now a resistance and a downside continuation. They are in the impression that they can take the price action for this to the natural take profit of this broadening ascending wedge, which is located at about 37.86, about 30, yeah, about almost 38 cents, right? So the reason why I'm saying that this is setting up a bear trap is because everything is suggesting bears. Okay, so we have that resistance. Now, please notice here on the 8-hour chart that we did print a bearish engulfing candle formation right over here. When we have that larger red candle engulfing the previous green candle that's smaller, that usually suggests a continuation to the way down. We are now below the exponential 21 and 55 period, so this is still looking pretty bearish, right? So let's go ahead and move on and find out why it's not. Of course it is down right now. Of course there is going to be some downside continuation, but the upside is a lot more, it's actually a lot stronger than it is for the downside. Okay, so let's just go ahead and reference volatility versus momentum here. And please go ahead and notice that volatility is starting to contract from a critical volatility zone, which is now arguably 2 in a row. Okay, so right back-to-back iterations of critical volatility, and both of those back-to-backs were both pivoted toward the upside, favoring the bulls. Contraction phase, and then a huge upside pump for that stochastic momentum, right? Please remember volatility is direction neutral. We pair it with a momentum-based indicator so that we can gauge that bias or gain the bias for direction in the asset, right? So in this case, please go ahead and notice that the pivots to the upside on stochastic momentum are now more actually now for real pitched to the upside. Okay, so this can technically serve as the firing of the signal officially. Okay, so what does that mean for us? That means that we can actually now start looking at the potentials of a backtest and statistical target. Okay, so please go ahead and just notice right over here that over the entire trading history of the VS asset, I've actually taken note of every single iteration where volatility has expanded into critical volatility and then started a contraction phase alongside momentum suggesting that upside. I have taken note of that iteration's duration, the upside thrust, and the amount of times that volatility versus momentum have guessed the upside correctly versus incorrectly correctly, those samples in statistical values, right, gave us a data set. So let's go ahead and take a look at that mean now. So this is a total of 34 iterations throughout the entire trading history of the daily chart, right, of VS. So we're looking at an averaged upside accuracy of 64 spots, 70%, with an averaged upside thrust of a massive 94 spots, 61% over the span of about 20 and a quarter days, just over 20 and a quarter, right? This is proof of work right down here. And let's go ahead and start applying that upside. Okay, so now that we officially have that signal fired, right? So it's let's see. It's actually still within that area. I mean, the reason why I'm actually thinking that maybe we could have fired it down here, but no, it's still downside pivot. So let's just go ahead and assume that the firing of the signal was now that both of the K percent and the D percent, which represent a 3-day exponential moving average and a 14-day simple moving average, are now pivoted towards the upside. So it would arguably be the last candle. Okay, so from the opening of this candle, which is right down here, let's go ahead and just apply that upside statistical mean of about 96, 94. What was it? Let's see. Let's go ahead and go over that one more time because this is ridiculous. My apologies. So 94.61%, right? So sometimes I just do a little fast just so that we can gauge that price, right? So go ahead and notice that from the target that we're currently sitting in, let's just go ahead and make sure that we have a little tighter actually. There we go. There we go. Okay, so please go ahead and notice that the target being suggested right now is actually not 140, but it is, let's see, about 153.84. Okay, so let's go ahead and just make a note of that. So let's go ahead and do it's not 153.84, and that's essentially what it was in a statistical backtest, right? Please remember that statistics are statistics and they're not certainties, right? So please notice how close we are now to the resistance level of this broadening descending wedge that we've been writing for some time. Okay, so based on this criteria is exactly why I'm telling you that this is a massive bear trap. Okay, you guys, so this would likely face probably a little more of a downside continuation before finding a serious area before a bounce, and it looks like the bulls may actually trap the bears and send them on a rocket ship. All right, so please do not take any of this as financial advice, okay? I'm not a financial advisor. Take whatever I do, show, and iterate as just a form of entertainment, okay? I need you to do your own due diligence, and everything will be just fine. All right, so let's go ahead and move on to the last part of the analysis and take a look at what we have here on the 30-minute immediate short-term time frame. Please go ahead and notice that we have a little bit of a pivot here in that 30-minute, but I never trust these pivots, okay? Another thing you can go ahead and think of is the positioning of your RSI signal. It is landing right in the gravitational zone of the bear weakness percentile, which is essentially telling us that we're about to get gravitationally pulled back in, right? So this is the 30-minute immediate short-term, likely to live out pretty fast. That bi-hourly is still suggesting that downside that we're talking about, right? Please go ahead and notice that the 4 hour is suggesting a limited downside here before a bounce, and it is also on that 12-hour time frame. It looks like the bears are starting to lose a little bit of that power. It does not look like such a significant drop. We are still within the gravitational pull of the bear weakness percentile, which would essentially have us come back up. So if anything here, this is suggesting a little bit of consolidation towards maybe the end of the day tomorrow or the following day. Right. So now referencing the daily, it is using that 14-day simple as a form of resistance, but I must warn that we are in the support range, in that gravitational zone of the bear weakness percentile, right? So when we're in this area, yeah, we can actually face a bounce and be rejected right into that bull weakness percentile, okay? And the reason why I'm saying that it's very much pertinent that we can actually face a very short-term downside before an upside is because of the buy daily. Check out the buy daily suggesting a limited downside right over here. So it would essentially find that support from that 14-day simple moving average, just like the way it's been doing, right? So we can find that support there and continue on on the ascension, right? So this is actually looking very good for VS, even though we're still suggesting a little bit of a downside. Okay, so let's go ahead and now look at the inverse fib from, let's see, maybe even the prior 8-hour iteration, but let's just see what the last 8-hour has to say for us. Okay, so let's just take a look at here. Okay. Perfect. Okay, so there's definitely a range here that we can actually look at as, or consider as, a loading zone. Okay, because this is absolutely rhyming here, and oh man, yeah, this very well could be it right here. So there is a gap that we've already closed, of course, but remember, I always talk about leaving the gaps in for future play, right? So previous gaps for future play. So let's go ahead and just take a quick note of that right there. And I mean, to be honest, to be perfectly honest, it's rhyming so much. The top side of this gap is rhyming so much with a 1 spot 618 that this is actually leading me to, I'm compelled to tell you that this is the loading zone here between the targets of about 75.05 to 75.77 before a bounce to the upside. Okay, so this is actually, it could very well be it. It's just rhyming too hard with that golden mean, right? So please remember, guys, I'm not a financial advisor, okay? I do need you to consider coming back to visit your boy, ARCa Bulls, right? So please go ahead and refer to the links in the description below for you to get in touch with me on Twitter and or Discord, okay? So please remember, this is that bounce area that I'm looking at before an upside, but that upside is still being looked at via a statistical backtest to be at about $1.53. Please remember that anything can happen in between that area from where we are now to there, okay? It is going to be a choppy swing play. All right, you guys, but with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.